Hi, welcome to the Market Alert for Friday, the 12th of August 2016. So yesterday we saw the market open, prices were trading sideways, and the news item there, medium impact mortgage delinquencies, which never actually got released any time soon after it should have been. So again, medium impact, not too much of a problem. It's the high impact like the non-farm payrolls, the FOMC meetings, those type of things that you have to worry about, but medium impact is never too much of a concern. And here we have a potential sell signal, which we see the market go down and actually fill. There was also a buy signal there which wasn't filled, and it was cancelled after the market filled the sell signal there. So the market trading down to the 18,550 level, finding support here. You can see the market turn around, and then we see a potential buy signal come in where the market then actually fills this and takes out the sell side for a loss of 6 points. Market then moves higher and then drives through the scalp, and when the market drives through on a big bar like that, it's an indication that you can actually start trailing the stop, and you'll see me trailing the stop through this as the market moves higher, and then you'll see the market take us out just below the 18,600 level there. Then sent out a note to say that the market's likely to trade sideways from this point forward, and you'll see the sell order there not being filled as the market finds support on that 18,600 level, and then eventually it just manages to move higher. And what I've done here is actually put on transposed across from the daily chart the all-time high of 18,636, and just to see how the market fares, see if it's going to actually break through. And I'll just speed things up a bit because you can see how sideways the market became, and there, and a bit more. Eventually you'll see that we get through, and there's the new all-time high of 18,640 being put into place. And then after this I just got bored, and as I said in my email that I sent out, that it was likely to go sideways, and that's precisely what happened, and that's because of the lack of news. So today, what have we got that could move the markets? Well, we've got 3 p.m. we've got the preliminary UOM consumer sentiment. This is out at 3 p.m. We have got retail sales and PPI and whatever. There's a bit of activity beforehand, so we could get a bit of momentum again within the first hour. But as it's the holiday period, school holes, and a lot of traders away, we could see the market sideways unless there is some momentum behind the actual move. In the daily charts, well, there's not a lot to report because, as I've said already, that the market's put in this new all-time high, and it's a matter of seeing whether the market can continue to move higher following this. Again, the market yesterday, the volume very, very tiny, and it's all below average and has been since really the Brexit vote in the middle of June there. So finally, on the implied volatility, a new record low at 9.10. We can see this from the chart now. The historical has caught up as well. I'm going to do some research today and find out what the lowest implied volatility level has been on, well, certainly for the last 10 years. I bought a whole stack of IV data from iVolatility, and we'll go back 10 years and have a look and see what the lowest is. I know there's a few 8s in there, but again, I couldn't tell you with any certainty and an accuracy which figure it is at the moment, but I will do for the next market alert. I'll give an indication there. So we could see this go below the 9 level and head down towards the 8, but we've certainly never been below 8 in the last 10 years. And I know the actual data it goes back to at least the previous banking crisis and crash that we had, so I'll be able to sort of see if we had those sort of, or these sorts of lows prior to the last one as well. So that's it for today. I will see you in Monday's market alert. As ever, thanks for watching. Have a great weekend, and see you in the next one.